And I'm so grateful that our next speaker is here with us. Henry McKoy serves in many different capacities, but in particular as Director of Entrepreneurship at North Carolina Central University. And in our next session, we're going to dig deep into the racial wealth gap. So we've addressed this in several of our panels, and now Dr. McKoy is going to present about how poverty and inequality are persistent themes underlying all of our discussions today. Thank you so much, Dr. McKoy.
So good afternoon, everybody. Good to see you all. Thank you, Jen, and I saw Cameron around here somewhere for the invitation to be a part of this conversation, this important conversation around equitable food and the things that we're all passionate about. And so today, I've been charged with this task of giving some context to what's going on with the racial wealth gap and how does that impact. And so we're going to talk about this through the context of looking at the racial wealth gap, essentially from the local on up to the national, because all these systems work on top of one another. And so if you indulge me for a little bit of time, I want to talk a little bit about some data and some information. So I wanted to ground it, first of all, in the grounding of the conference, right? This is what the conference is about, people-centered policy. And this question really stood out to me. How can we move from charitable intervention to a justice approach to food systems reform and community development, which I think it's a central question for this work, but in a broader sense as well. How do we move away from this idea that everything is driven only by charitable outcomes? And a little bit later in my presentation, I talk about how that kind of charitable model has impacted some real world situations. But then the idea is that we will look at how do we shift power in this work from what it is now largely, which is constantly about doing something on behalf of somebody. We're stepping in on behalf of somebody versus this sense of making sure that the individuals themselves are a key part of the work, that they're doing the work and that they're moving forth. And so I did want to ground this first in what this conference is about, and then hopefully build from that. So going back to that question, how can we move from charitable interventions to a justice-based approach to food system reform and community development? There's a couple of ways with that, and I saw my partners from United Way here, Nick Allen, and I saw Angel Brown around here. They've been key partners in some of the work that we've been doing here. And this autonomous power piece comes from some work that they're leading in partnership. But equity by design is also a key part of this. And so as I talk about this work, I often talk about the understanding that we have to think about this work through the lens of how do we use human-centered design to create equity, because in reality, we've created the inequitable system that we have from that same human-centered design. And so the inequity that we see is by design, and so therefore we must create equity by design, but we also must give communities this sense of autonomous power as they move forward. So let's look at contemporary America as we live today. So I want to start out with this kind of broader sense of what's been going on from a landscape standpoint. Our society is becoming more and more segregated by race and class, and we're seeing it all across the United States. This is some data. I've had the opportunity to do some work at Harvard over the last number of years, and some of the data that comes from Harvard shows that we are seeing these high poverty neighborhoods, and high poverty in this sense means neighborhoods that have at least 20% concentrated poverty and higher. And so what we know about these neighborhoods is that they're growing over time. Over the last essentially 15, 20 years, we've grown from about 13,000 neighborhoods to what you see is over 21,000. Now, the interesting about this is that historically, just because you were poor didn't mean that every single person around you were poor. But now we're seeing more and more of that concentration of both class and race, and talk about that in a moment. So what we have is high poverty neighborhoods have grown from where poor people are in 43% of the neighborhoods that were in the United States around 2000 were high poverty. Now we're over half, and those data points are continuing to grow. The second point I wanted to talk about, which will help to guide the conversation today, is what's happening with wealth from a racial standpoint in the community. Now, keep in mind, this data is from before the pandemic, right? So we know that the data has accelerated, but there's a report called The Road to Zero Wealth that was put out by a think tank out of DC, so you're free to Google The Road to Zero Wealth, but essentially says that based on current data, again, this data was before the pandemic, that African Americans were expected to reach zero median wealth, which means it's essentially the place where half of the African Americans are above it, half the African Americans are below it, by the year 2053. Latinos are expected to hit that point 20 years later by the year 2073. Now, keep in mind, this is all within the context of a browning of America and the minorities becoming a bigger portion of the overall landscape. And so what we have is a steady decline of wealth amongst people of color, particularly Black and brown folks. And the data point I didn't show here is that white wealth, of course, keeps going up. And I point out that this particular report was released on September 11th in 2017, which was a few months before the tax cuts that Donald Trump went through. So the gap has even widened even more. And so keep that in mind, that we're talking about a situation where people of color, particularly Black and brown folks, are losing wealth on an annual basis, and it's declining to zero. So I want to take this from, this is about national, statewide, local. So I want to take what I just told you from a national standpoint and bring it down to where we are now. We're in North Carolina, we're in Durham. What we've seen in North Carolina over the last 15 or so years is a tripling of high poverty neighborhoods. I mean, you go across North Carolina, it went from those neighborhoods that are greater than 40% poverty from about 37 in 2000 to almost 110 by 2016. In terms of neighborhoods that have at least between 20% and 40%, you see that's gone from 262 neighborhoods to 669 neighborhoods. Now imagine that's a lot of neighborhoods. That's what we're seeing across the state of North Carolina. Even as we, on a daily basis, hear about companies relocating here, creating all these jobs, what we're seeing is, again, a concentration of poverty. And so one of the themes that have covered this work today is that I will put a particular light on what's happening to the Black community, because what's happening to the Black community is happening at a tremendously accelerated pace. And so when we talk about Blacks in poverty neighborhoods, it's increased by 203% within that 15-year period. And we know that Blacks really are the centerpiece of this growing group of high poverty neighborhoods. And so across North Carolina, we're seeing this, and African Americans are much more likely to live in high poverty neighborhoods than whites are, than Latinos are. Certainly Latinos are more likely than whites are. And so we're seeing a racialization of poverty in North Carolina that is accelerating. In Durham, as Durham has grown, we've seen a doubling of the neighborhoods. We went from 4 in 2000 to 8 in 2016. Went from about 4,700 folks in high poverty neighborhoods to over 25,000. And so what we have, again, even as we've seen prosperity, if you've gone through downtown Durham in the last 20 years, you've seen billions of dollars invested in that. But we're seeing more and more that folks are getting pushed out these places where investment's happening into places where investment's not happening. And that ends up becoming a very consistent theme when you think about how gentrification works, right? I mean, you end up in a community where nobody will invest in you at all until, it gets so expensive someplace else, and now they want to invest, but not necessarily in you in the community, but in the community itself with you kind of pushed out. And so in Durham, what we've seen is a increase in not only what we know to be residential gentrification, but also commercial gentrification. But I want you to hold these things right now in terms of thinking about North Carolina and Durham as microcosms of what happened across the United States. So I want to give you a sense of understanding, in I hope a fairly simple way, what this means. This is some information that I share sometimes and I pull together around what kind of racial economics and entrepreneurship looks like. And I use that as a basis. I'm a business professor. I'm an economist. I do work in economic development, so I think a lot through those lenses. But I want to try to break this down for you in a way. If you think about this room here, I don't know how many folks in here, maybe 100 folks, so just imagine there are 100 people in this room. If we look at the United States through that lens of 100 people, so 100 people in the room, 60 of those people would be white people, 13 would be African Americans, 1 American Indian, 6 Asians, and 19 Hispanics. Now let's think about how we divide the economic power amongst those people. The 60 white individuals will own 83 out of 100 companies. So we broke everything down to 100. 60 of those whites would own the 83 companies. Now, keep in mind, this is folks sharing this. So the 13 African Americans that are in this room would share between them 2 companies totally. And so forth and down, so forth. Hispanics, the 19 Hispanics would share 6 companies. And so you see already the economic mechanisms that drive the economy are not equally dispersed. Now, let's say, again, the economy was broken down into $100 in cash. So all you had was $100 in cash. Those 60 individuals, those 60 whites that owned 83 of the 100 companies would also control $90 of that $100 in this room. The 13 African Americans that owned the 2 companies between them would have $1 amongst them. They would have to survive on $1 over the course of the year. Now, keep in mind, again, this is pre-COVID. So what we've seen largely, particularly with the African American community, is a halving of that. And so now you would have those 13 individuals pretty much sharing 1 company and about 50 cents, things of that nature. Asian Americans actually tend to kind of operate at parity. Hispanics, again, just like African Americans, tend to run in the negative. And so those 19 Hispanics would own 6 companies between them, and those 19 folks would have to live off $3 a year. Now, the entrepreneurial strength, what that essentially weighs is this sense of, this is a capitalist society. And the way we create income, the way we create jobs, the way we create investment is through entrepreneurship. So again, if you're taking that same kind of idea of 100 as being the entrepreneurial strength, whites essentially account for 92% of that 100% of entrepreneurial strength, which essentially means that not only do they have access to, they have cash, they have assets, but they also have access to capital, like venture capital, to loans and things of that nature. So they have the ability to create the economic world that they want. Asian Americans are the only other group that actually has that, some aspect of that, and there's a lot of reasons why that. Part of that is the connection to the international markets like China and places like that. But you see the communities of color of outside of the Asian Americans are really not doing well at all, and in the negative. So you talk African Americans, -48, Asian Americans, American Indians, -2, Hispanics, -54. And what that means in practical terms is that these populations are saddled with things like debt and have the inability to get access to capital. The capital markets are inefficient and they're, just downright inequitable. And so we end up being in the hole, and just getting to zero is a monumental thing. And so this is what America looks like. This last particular column, there's a book that's coming out from Duke University Press actually called The Pandemic Divide. I have a chapter in the book, and part of what I talk about in the book is what happened with the payroll protection program and how did that impact this. And again, I will touch on that a little bit later, but let's just say that it didn't help the situation. And when you look at it, I always try to point this out. If you look at out of the 100 loans, if we broke the loans down to 100 loans in the United States, whites got 83 of them, blacks got 2 of them, et cetera, et cetera. And in some ways, people say, well, wait, that looks actually pretty consistent, right? I mean, there were 83 companies, they got 83 loans, 2 companies got 2 loans. But the thing about it is, if you read through what was the legislation around the payroll protection program, it was actually supposed to be for organizations that needed the most assistance. And so essentially what the payroll protection did was kind of solidify what was already in place and essentially what we have as the status quo. And so anyway, this is a quick snapshot of what it looks like, what equity or inequity, however you want to frame it, looks like in the United States. And so these are the numerical aspects. I now want to kind of show you what it looks like visually. So we spend a lot of time, we have spent a lot of time in the recent months, the recent several years talking about the COVID curve, right? So my curve predated the COVID curve, but I think it's a good reference as it relates to understanding what you're looking at. If taking the data that I just showed you, if we were to map that onto a curve, this is what it would look like. The blue line is equity. That means that if every group essentially had the share of the economy that their population made up, it would all be flat. There'd be that blue line. But instead, it's that red line. And what this is, it's a relative index, which means that when one group goes up, somebody else has to go down, and so forth and so forth. And so you see the white community in the United States, pretty high up. African Americans are below, American Indians below, Hispanics below, Asians above. And so this is what, inequity looks like in a snapshot. And this came from, I was doing a lot of work in different communities, and you would go in these communities, and many of them would say, oh, well, I want to address these issues, I want to address that issue, but the question was, how do you know where you are from day one? And so when I developed this index, it allows me to go into a community and say, let's take a snapshot of where you are today and where are your populations at relative to one another, and what does that look like? So there's a lot of work to happen, and in order for since it's relative, that in order for, again, one group to go up, somebody else has to come down. I want to take this from, again, the national down to the state and the local level, and explain to you what you're looking at right here. So when you look at the United States and you look at North Carolina and Durham, I usually try to have individuals in the audience imagine this like a bank account. Imagine this is your bank account, and this is essentially what the resources you have to draw from for your survival. And I compare these different aspects because, again, this is about equity gaps. We just talked about what the United States looked like. North Carolina, we were looking at access to capital and economic strength, and economic strength matters in all kind of ways. Who has the economics impacts your health, your education, who gets charitable dollars, all these kind of things, who builds the communities, who creates the space, the cultural affirming spaces. And so in North Carolina, whites would have $112 in their bank account, blacks would be negative $76, essentially, American Indians would be -3, Asian Americans would be right above that, about 5.6, and Hispanics would be -32. You see from the national to the state, Hispanics and African Americans have switched places in terms of being at the bottom of the totem pole. But I think the point that African Americans are more than double in the whole than any other group is the fact that the minority groups on the whole is an issue anyway, but just the depth of that economic strength. So again, it's like digging yourself out of a hole from that standpoint. And when you look at Durham, it becomes even more startling. And again, this would be something I cover momentarily, but whites in Durham would have almost $200 in their bank accounts. Blacks would have -144. Hispanics would have -55. American Indians, and part of this, just from a reality standpoint, the American Indian population, because it makes up such a small portion of the population, this is not to say that American Indians are doing super fantastic, but, numbers scale. And so in terms of African Americans and Hispanics in Durham, just doing a lot worse than the white community. And so think about this in the context of the surprising nature of it, is because Durham is held up as an incredibly progressive community, right? And so you wouldn't expect to see these kind of gaps in a community that holds itself up to be extremely progressive. But I'm going to speak on that in a moment. Similarly, as I did before, I wanted to graph this for you. And so we keep the red line as the U.S. Again, remember the blue line is equity. So if it was perfectly flat, then everybody would have their share. The red line is United States. The green line is North Carolina. The orange line is Durham. And so what you see here is that, again, you see these bigger gaps. You see the white community in Durham is way up the economic spectrum. The blacks are way below. And you see the other groups. And so essentially, again, this gives you some sense and understanding of just how glaring these gaps are when you're talking about equity. And so that gives a baseline. So you remember I mentioned to you a minute ago, and the colors I want you to look at this primarily are the red and the green, and then the purple at the top. A little bit of off coloring came in, but those are three that you really need to look at. The purple at the top are the white communities. The red is the African American community. The green is the Hispanic community. I did analysis of about 21 cities through some work I've been doing at Harvard to understand, well, where are these places at from an equity standpoint? And what you understand, regardless of what happens, people always ask me, well, you know, where can I look at what they're doing so great? You know, where can we try to find models of this equity work? And I say, well, it's all relative, right? I mean, I can show you places that are better than other places, but everywhere I go, black and brown folks are catching it. I mean, it's not like that I can take you someplace that says this is wonderful. One of the most surprising places is Atlanta, right? I mean, look at Atlanta, the black-white gap. I mean, even in what is essentially known as kind of the black paradise, you still have these huge gaps. And so a couple of things came out of this that you know, I don't have the time to really go into extreme detail today, but what essentially I found is that in a lot of places, the more the liberal the politics were, the bigger the gaps, which again is kind of counterintuitive to what you think. But the reason I found that was when you start going in and understanding policy, there's a couple of reasons around that, right? One is that when you go in and start understanding policy, you find that in those places you have policy that tend to be very paternalistic. And so going back to that kind of original slide around doing it on behalf of somebody, you have all these folks that are so, you know, passionate about this and that, but it's always doing on behalf of somebody. Give me the money, I'm gonna help them. I'm gonna do the project for them, things like that. And so you end up with all these gaps. And so in some of the places that were, when I looked at it, I was like, wait a minute, you know, these are the places that vote the most blue and all these kind of things. They had these biggest gaps. The other thing that we know about this, and this is again for probably another conversation, is that place matters, right? I mean, people want culturally affirming places. And so what you have is, you see with the red line, these are places where African Americans tend to go to, right? They go to Atlanta, they go to Cleveland, you know, Memphis and Newark and things of that nature. So what you end up with, because of the economics at an aggregate level, you know, with a whole lot of black folks showing up in place, and a whole lot of them are poor, right? They go there because they want the culturally affirming places, but then the economics don't necessarily work out. I mean, even as great as Atlanta is, there's still a whole lot of poor black folks in Atlanta. You see a similar pattern when you look at the Hispanic Latino population, because you look at places like El Paso, Fort Worth, Houston, you know, these are places, Los Angeles, where they have large Hispanic populations, and they do the same thing. They aggregate in places, and that poverty aggregates as well. And so what you find is wherever you go, the white folks are just way up. I mean that's what it comes down to, these enormous gaps that you see. And so we really have to think differently about, I mean, how do we go into communities and really, you know, lift those communities up and lift these populations up? Because again, even places that, you know, Atlanta, Memphis, some of these places on lists are always the top places for African-American business and entrepreneurship and things of that nature. And so this is what I found when I looked across the United States, and certainly there's a lot of troubling aspects of this. So I want to move now to this conversation around poverteering. You may say, what is poverteering? Well, poverteering is a term that I came up with a few years ago when I was doing some research, and I found this what seemed like a very confusing dynamic amongst data, right? So poverteering is when you have an increased population, so it means you have a bigger share of the overall population, you have an increased share of the entrepreneurship population, yet your wealth is declining. And I'll talk a little bit more about that in a moment, but to give you an example, again, looking at the African American community, I did some research on a 40-year period of African Americans and starting businesses. And what you have is this graph here. So the blue is the firm change. These are percentages. It means that if it's above the line, that means that those African American firms were started on a regular basis, on an annual basis. So you see, you know, it rose from 77 up to 1992, declined a little bit, went back up, and it went back up again. So that's firms are getting started. We know that you can pick up a paper and they say, oh, well, there's no better time to be an African-American business or minority business, things of that nature. The orange line is the revenue change. That's percentages, right? So as the firms are growing, revenue goes up. You see, at least in 77, the revenue outpaced the firm growth. 82 was a recessionary year. It didn't. It started going up. So what you saw is, okay, you have more firms and they're making more money. Well, as you keep looking at the graph, you start to understand and see that around the 21st century, it flips. And so essentially, in the entirety of what has been the 21st century, Black firms have been poverteering, which means that essentially firms keep getting started, but they're all sharing the same revenue. I mean, that's what it really comes down to. We can talk all day about the number of new businesses that start and how many get started, but essentially they're sharing the same revenue. And I mentioned kind of how that ties to this charitable model in a moment. But I want to talk a bit more about this poverteering aspect. So in a normal theoretical economic model, what you would have, generally speaking, is you take an axis and you say, well, the population share. And when I say population share, I mean simply when I showed you 60% of the population was white, 13% was African American, et cetera, et cetera. Well, if I take you back a few years ago, 70% of the population was white. And so the population share of the white community is going down as the population of the minority community is going up. We've seen, for example, Hispanics have exploded. The thing I didn't mention earlier that I do want to also bring into this conversation, what I think is important, is that part of the reason some of the Hispanic aspects of their challenges are masked. And it's masked partly because Hispanic is an ethnicity, right? And you can be a white Hispanic, a black Hispanic, so a lot of times we think about Hispanics through the lens of Latinos. And so if you were to extract like white Hispanics and others out, you see a bit different picture of what the economics really looks like. But in normal circumstances, when a group becomes a bigger part of the population, then just by nature, they're going to start more businesses because people start businesses, they start businesses. So that's a natural progression. You become a bigger part of the population, you start more businesses. Well, generally speaking, when that happens, you should also have a bigger share of the overall income, so the kind of revenue that comes about. And because you start more businesses and theoretically those businesses are growing, you should have a larger wealth share. So that's kind of the natural flow of things in a what we would call an economic normal curve. Poverteering is essentially in the United States right now what Black and brown folks are doing, particularly African Americans and Latinos, which means that what you're seeing is an interesting dynamic. And I try to look at this from the left to the right. Blacks and brown folks are increasing their part of the population share, right? So again, we know this, the browning of America, the darkening of America. They're also increasing their business share. Now, part of that is that these are necessity businesses. You know, the old statement about the last hired, first fired, that happens to be true, right? I mean, it tends to be how economies work, and particularly when you go through recessions. We'll talk about that in a moment. The income share is actually increasing, and what I mean by that is not that Black folks are catching up with white folks in terms of the incomes. It's just that they're getting their incomes are growing a little bit faster than their overall share, but there's still a huge gap. But the wealth is continuing to decrease. So those things shouldn't be happening. You shouldn't be increasing the number of folks, because theoretically, when you have more income, you can spend more money in the community, right? I mean, theoretically. But this is not happening. And so this is the dynamic of poverteering, where you're actively working to get poor, right? And that's not a normal thing. And so that's what we're seeing with African American and Latino communities. This is what we're seeing, and excuse me, I didn't come up with a more creative name than inverse poverteering. So read this from right to left. This is what's happening in the white community. Essentially what's happening is that the white community is becoming a smaller part of the overall population. They're becoming a smaller part of the business population. The income share is declining, but it's still huge and still a lot bigger than the people of color. But their wealth is increasing. So you have a more concentrated wealth growing. And so again, that shouldn't be happening. And so that's what's driving all these huge gaps that you see and in society, is that the wealth is being concentrated, and there's a whole nother talk we could talk about what that means in terms of politics and what that means in terms of who has impact on all these kind of things. But this is the reality of what's going on, and it's very disheartening. So I want to talk now. Let's bring this back to this conversation. So here I looked at these industries, and all these industries that have some impact on almost everything, but they certainly have impacts on food systems, right? I mean, food systems you can construct restaurants and buildings. You can manufacturers in there, wholesale trade. Who does that? The retail, restaurants and things of that nature. Transportation and warehousing, how food and things travel. Information, who's sharing that, finance, insurance, all real estate and rental. All these things are things that are certainly keys to the food system. Now let's look at what's happening here. So if you look at the top, so white, 66% of the population. This data is a little bit dated. Blacks, about 13%, et cetera, et cetera. But if you look at who controls the industries, essentially, whites control 80 to 90% of every industry, every major industry you have, even though they make up, at this point, around 60%. African Americans at around 13% account for, 0 to basically 3% of most industries, but for the most part, only 1% of the industry. So again, imagine that you have these large populations, and there's a kind of asymmetry to kind of their overall population and what they control from an economic standpoint. If you control 90% of the means of production and the factories and all those kind of things, you control a lot. If you only control 1% or less, you don't control a lot at all. And so these things have real world impacts on how systems grow, how systems evolve, who gets hired, who gets the opportunity to work with organizations, things of that nature. And I mention this because when you look at this 80 to 90% of ownership, and you think about the graph I showed you that showed that businesses and revenue for African Americans were growing up to the 21st century, and then the revenues growth started declining. What you essentially have, if you think about to the civil rights movement, which of course was capped by, think about Rosa Parks in 1954 and the Montgomery bus boycott to Dr. King's death in 1968. What happened after the civil rights movement was what a lot of people refer to as the civil rights movement, where you had a lot of black businesses that were being created that were starting. Well, when the federal government initially moved into that space, African Americans made up about 10% or so of the population. So there were these 10% set aside. And at that time, it was primarily African Americans that were in this battle. We didn't have the same size of the Hispanic population that we do now, and things of that nature. But I mention that because the reason why we're seeing this poverteering and we're seeing this continued decline in wealth and we're seeing this negative revenue growth is because, for the most part, that same 10% that was set aside back in 1970 is the same 10% that folks are fighting over now. But now we have a lot more protected classes. Like every protected class gets put into the same bucket and say, okay, well, now you go after that 10%. And from a racial standpoint, from a veteran status, from a gender standpoint, and so you end up fighting over the same 10%, and so it doesn't grow. And so that's a key part of this, and that does lead you back. I mean, we're in the South, right? This is the Bible. It leads you to this kind of tithing mentality, right? We're gonna give you our 10%, and then don't come back again, right? You do what you want with the rest. I mean, that's kind of what we see now. We see whites control ultimately about 90% of every industry, and then every other group ends up having to fight over the rest of 10%. I wanted to use this slide as I'm kind of moving towards my conclusion to just give you now. Look, I know this is. I know y'all been having a good time and eating all this stuff. I sometimes feel bad. I get up here and I talk about these things, and I know you're not gonna walk out here feeling really good about this, right? Because I mean, this stuff is hard when you look at it. But I want to give you. I want to give you this slide to give you some sense of just how big this racial wealth gap is. I mean, it just kind of puts it into perspective. So I pulled these data, and these are, I wasn't trying to like on a daily basis go. So I mean, Elon Musk has been over $300 billion since then, and it goes up and down, and he's trying to take over Twitter now, and all these kind of things. Jeff Bezos, been over $200 billion. But I want to use some of these data points to give you a snapshot on just how big these gaps are. On August 26, 2020, Jeff Bezos became the first individual to go over $200 billion in wealth. His wealth, I don't know if you're like me, but it's like Amazon has a parking spot in front of my house. Something's always happening and coming to the house. In one day, Jeff Bezos increased his wealth by $13 billion in July of 2020. Now, I want you to compare that to the fact that all the black billionaires in the Forbes collectively have $16 billion, right? So Jeff Bezos basically, in one day, increased his worth by 80% of what all the 7 black billionaires have from the Forbes. And I keep in mind the 5 of the 7 black billionaires are athletes and entertainers, right? You know them, they're Oprah, there's Michael Jordan, there's Tyler Perry, there's Jay-Z and things like that. So again, we have these challenges and around that. And we see the increase, the 25 richest billionaires grew from March to May. Now keep in mind, I mean, we all know this, that was in the midst of the height of the beginning of the pandemic, right? Increased their worth by $255 billion. The 400 richest folks in the course of that year increased their worth by $3.2 trillion. There's one black on the Forbes 400, Robert Smith, who's an investor out of Austin, was the only one on the Forbes 400, and compared to his counterparts, he looked like he's on welfare, right? I mean, so, but what it all comes down to is you look at this collective black business. I did an estimate. So there's about 3 million black businesses in the United States. So all the black businesses together, put them together, take all their revenue, so every bit, not profit, I'm not talking about the amount they make after they pay payroll and all this taxes, I mean the amount of revenue they make totally. You take the amount of revenue those 3 million businesses make, and the estimate is somewhere, and I was being very generous with my assumption that they increased by about 15 and 30%. They somewhere between 170 and 195 billion dollars. 3 million black businesses. These are businesses, right? These are businesses, people that have shops and all this kind of stuff. Jeff Bezos' worth as an individual eclipsed 3 million black businesses altogether. Elon Musk, when he went over 300 million, I mean, went over $100 billion more. I mean, these are some astronomical numbers, right? I mean, 3 million businesses compared to one person. So when we're talking about this racial wealth gap, I mean, these are things that we're dealing with. I mean, so this is, this is nothing to sneeze at. I mean, this is real, and it has impacts on everything. I want to kind of start winding down, but here's some broad past and present trends. Black firms are the only racial group declining in firms with paid employees. Those firms generate the most revenue, the most profit, things of that nature. Me and Jim Johnson from UNC Chapel Hill did a paper together a couple of years ago that looked at that phenomenon. We looked at the 5 racial groups that I've talked about here: whites, Hispanics, African Americans, Asian Americans, American Indians, and black firms are only firms that are shrinking in terms of those with paid employees. So what does that look like? So what ends up happening is, if you think about like the hair care industry, when I was growing up, every Saturday you watch Soul Train and Johnson Products, all these things come on. Well, Johnson Products not owned by black folks anymore. Shea Moisture is not owned by black folks anymore. I mean, so what happens is you see these firms that have historically been bellwethers in the community and hired folks start to shrink. And I mean, Motown's not owned by black, and so I want to give you some context of what was happening, and that has some incredible ramifications whenever your anchor institutions are disappearing in some ways. As I mentioned before, white firms on average comprise about 87% of the ownership of all industries in the United States, whereas black folks on average own about 1.5. Again, some of those industries, there's zero black folks, period, in those industries. What we know from the pandemic is that black firms declined in the first few months by 41%, and then there's an expectation that from that 41% decline, another 50% would decline by November 2020. So we're talking about 75% of firms that have employees disappearing as a result of the pandemic. And as much as I can be supportive and do support this idea of Buy Black campaigns, all that stuff, that's just not going to be enough. You can't do one day of go here and do that and think that it's going to close the gap. And I always like to say when I do these interviews is that the most troubling part about this is that think about the hurdle that you have to get over. Somebody has to die for you to decide you want to go and shop. And I mean, because a lot of this, of course, came after George Floyd. That's a mighty high hurdle when you think about the idea of just spending money at some place. And so these are all things that we're dealing with right now. In terms of the future, just some quick things. Poverty among black folks is not budging. It's basically holding steady and actually getting worse. Looking at data over the course of 25 years, the wealth gap is continuing to grow. Even when you have equal achievements, when black folks and white folks have the same educational degrees, that doesn't close anything. I mean, you still have gaps, and we know that. So you have these unequal gains. I talked a little bit before about what goes on in these neighborhoods and the segregation of these neighborhoods. Well, when you have high segregation, then of course the folks who end up being hurt the most ends up being the minority communities. You can have kind of all white neighborhoods all you want, and they do fine, but when you concentrate poverty and race together, blacks suffer more than whites. And we know this from just everyday data, that it's becoming more and more difficult for folks from an economic standpoint to rise above their birth status, which is again counter to what America's supposed to be about, where you can start in one place and rise above. And we know a few years ago Charlotte was named as like the worst city in the United States for that economic mobility. So it's just becoming much harder, which ties in all these issues that we have with trying to convince young people that there are better ways, and like if you can't see a future that's hopeful, you have problems. Now here's a really kind of hard statistic to think about. Black Americans now control relatively the same amount of wealth now that they did at the end of the Civil War. Now, of course, there's a lot more capital, right? But in terms of the comparison to the overall country, it's still less than 1%. So 150 years ago, after 250 years of slavery, the black folks then account for the same amount of wealth that we have now. Again, that should kind of give you some context of just, again, how big this gap is. So what do we expect to happen as we go forward? So we're going to see an increase in U.S. overall black entrepreneurship post-COVID. Again, going back to the idea that a lot of folks lost their job. And those folks aren't going to be brought back into the workforce. They're going to have to start their own business. We see this with every recession, which is why when you look at a recession, you see this inverse with entrepreneurship, particularly of people of color, where entrepreneurship goes up because they don't have a choice but to start businesses because they can't get back into the workforce. Because once you get out of the workforce and then that person that gets left behind, they say, hey, you want to keep your job, you're going to do 3 jobs. And then you start doing technology. Well, these jobless recoveries end up being, well, hey, you've been doing those 3 jobs pretty good, so why don't you keep doing it? Or we figured out a computer could do this better. But we're going to see an increase in black entrepreneurship. But tied to that, we're going to see that continuation of this racial inequity, because those increasing businesses are going to still be fighting over these same dollars that haven't been growing. We're going to see a relative and absolute decrease in black firms with paid employees. Again, those black firms are the ones who historically have anchored the community. North Carolina Mutual Insurance, once the largest black business in the world, not in Durham, not in North Carolina, not in the world, when it had $8 billion under assets under management, is essentially shut down. And so we're seeing more and more of these businesses that are closing. And like I said, the payroll protection didn't help it. It actually exacerbated the problem. We saw all those stories about folks that were getting money that didn't need money, Ruth Chris and these places like that. And we're going to continue to see accelerated road to zero wealth if we don't do something different. Again, this is post-pandemic. We already hit the zero wealth amongst black and brown folks. We're going to see an increase in that. So what we need to do is, here's some things that I spend a lot of time talking about. We need to increase the diversity of black entrepreneur pipeline, which means that we need to look at all those industries that are dominated by the white community and figure out how do we get more black and brown folks into those industries, right? How do we get more representation in those industries? Because they grow, they become a part of the economy. So we need to do that. Secondly, we need to increase the scale and diversity of the capital that we get. First of all, black America gets very little capital at all. And when it does get capital, it gets a lot of times debt. Debt is debt, right? Debt works, but debt can't be the only thing that you get. I mean, you need equity. Equity allows you to grow and things of that nature. Also, the public sector invests a whole lot of money into enterprises. Our tax dollars go into a pool. Our insurance premiums go into a pool. And so public and private sector both invest tremendous amounts of money into these economies. And so we need more of that capital coming back into the community. We need to expand the place and space available to black businesses. Historically, we've been kind of put into these, we say, oh, well, you can operate over there, but not over here, right? And in these communities, a lot of times, there's no investment. And so you end up circulating pennies. What we have to do and what we need to do is to have the ability to not only rethink and redevelop those spaces into higher growth areas that support job creation of the people in those communities. But we also need to make sure that whether it's in real estate on the ground or whether it's online, cyber, whatever, that there's more representation on how you capture dollars. You need more places to capture dollars in order to grow. And then finally, the last action it's kind of a catch-all for anything else that doesn't fit in the first three. There's just all kind of barriers that in order to be a successful entrepreneur anyway, and then when you put race in there, it becomes even higher. And then when you integrate race and gender, it becomes, you have all this intersectionality. And so those are things that we need to do from action items. And we also, the reality of it is we need to change the American culture. The American culture is one of inequity by design. That's just the reality of it. None of us have to do anything in order to bind to that. It's just here. All of us on an everyday basis contributes to that in some kind of way, just based on the way systems are set up. We have to be very intentional not to. But we have to measure these things too. We have to not only change the culture, but measure these things. We have to figure out, again, what are the number of black businesses and other minority businesses with paid employees? How do we increase the revenue of those businesses so that they're, again, creating more wealth and opportunity? How do we identify the public money that's going into these businesses and the private money going into these businesses and make sure that's increasing? How do we make sure that so that's public and private on 3 and 4. Geographically, how do we make sure these businesses are more zip codes and they're online and things of that nature that allows more capital to be captured? And then one of the key things is that we know from research that the earlier children are introduced to innovation and things of that nature, the more innovative they are in the long term. And so we have to figure out how are we introducing young people to opportunities to be inventors and innovators and entrepreneurs and things like that at the earliest stages so that when they grow up, that they have that. And so we have to measure these things. We have to change the culture of America. So here's the conclusion. So, and this probably won't be news to many of you all. The U.S. black business ecosystem has been hollowed out from centuries of fiscal exclusions and economic discriminations. You can look over history, whether it be the Great Depression and all these other, the Great Recession, the pandemic, the community continues to get more and more hollowed out. And just like I'm talking in point 2, as investment has gone back in, it's gone in inequitable ways. There's a very interesting book out called When Affirmative Action Was White. And it really just talks about how essentially many of these government programs were never set up, of course, for the black community. They were set up for the white community. And so the CARES Act, when you look at it, really had a lot of those same components to it. Now, we're going to see how the Build Back Better stuff works out. That has more language, at least, around equity. But the CARES Act, again, exacerbated a lot of these issues that we already knew. But the thing about it that's different this time is that if our populations are left out, it's going to have a much bigger impact on society going forward. That's just the reality of it. Because America is becoming blacker and browner, and it's on its way to become a majority-minority country. And so it's one thing, if the majority of a country has low, no, or negative wealth, there's not only a problem for that population, it's a problem for everybody. And that's essentially where we're headed based on these trends. And I hear people say this all the time. Well, what does it make who owns the business? I've heard, why does it matter who owns the business? Well, it does matter. My wife hates snakes. She just hates snakes. She doesn't even want to watch snakes on TV, right? She's one of those, if a snake come on, you got to turn the TV off or something like that. But snakes serve a valuable role in the ecosystem, right? They eat rodents and things of that nature. Bees, people don't necessarily like bees from getting stung, but they do. They have important roles. Every racial and gender, these businesses have a role in society. And if those businesses become extinct, then you're going to see some real negative consequences that you don't think you will at this point. But that's why it's important to make sure that happens. And then I guess lastly, some of the outpour and the outcry and the things that happened in the midst of the COVID and George Floyd and all that kind of stuff, as the old saying going, if these economic disparities continue, what we saw then is going to be like a tea party compared to, when people don't look around and don't see hope and opportunity and things like that. So it's to our best interest to focus on all that. So together, can I end on a high note? And the pressure for an hour. together, we must change the way, we must change the U.S. landscape. We got to pull together, all these sectors, the public sector, the private sector, the philanthropic sector, the academic sector, the community sector, with the community at the center of this. Going back to the first slide, to what this conference is about, it's got to be people-centered, it's got to be human-centered. We got to think about what that is, because that drives the whole design of the system. And so we have to come together, and as the old saying goes, to a hammer, everything looks like a nail, right? I'm an economic development person, I'm an economist, so I feel like that entrepreneurship and economic development has a foundational importance to how the rest of society operates in a capitalist society. And so as we think about education, as we think about health, we think about workforce talent, all those things have a connection to what happens in our overall economic landscape. And yes, food systems equity as well. And so for me, I'm happy to be here because I feel like the fighters are in here to do this work. And we got to come together, and regardless, I wake up every day, and when I do these presentations, and I understand these gaps, you almost got to just look at them and keep on going, right? Because if you don't, you get paralyzed by just how large they are, and understand that what we're doing now is not just for us, right? I mean, it's for those that come behind us. We do what we can. You do what you can, and you try to do it smarter, better, bigger, faster, and you keep passing on. And so I want to thank Cameron and everybody for this opportunity. I want to thank you all. It's been a joy to talk to you all, and feel free to reach out to me. If you want to talk about this, all right?